What's up, everybody? This is Skylar, Money Maximizers Podcast, and it is true what it says in the title. I do think paying more taxes is a good thing. And I know that that's going to throw a lot of you off. Red flags are going to go up. No way, not right. You don't want to pay more taxes. You don't want to pay more bills on anything except for taxes. And I will hopefully explain this, but to summarize it all, if you don't have time to watch the rest of this episode, if you're paying more taxes, it's because you're making more money. And I think making more money is always a good thing. Secondarily, I think that generally it is important to always worry about things that you can control, not stress about things that you cannot control. I think taxes are something that you cannot control. And therefore, I think you should focus more on making more money rather than worrying about the fact that that's going to mean you're going to pay more taxes. So, I'm going to go through this. We're going to talk about taxes generally because I think there's a lot of misconceptions that hopefully at the end of this, you'll agree with me. If you don't agree with me, that's fine. I'd love to hear you bash me in the comments below. Let's get into a discussion and let's all learn from each other. So, start off, Ben Franklin, you can't have a tax episode without his famous quote. In this world, nothing is certain except for death and taxes. So hundreds of years ago, it was clear we're all going to die and we're all going to pay taxes. So whether you like it or not, taxes are inevitable. So rather than worrying about them, learn how they work, learn how to maximize your deductions, and focus on things you can control, like increasing your income, which the byproduct of that is probably going to be more taxes, and that's okay because you still have more take-home money than if you wouldn't have increased that income. So, one of these misconceptions, how I understood taxes initially was when you go to the next tax bracket, that next percentage drops to all of your income. So, maybe I should step back. A lot of us know that the federal tax system, the income tax in the US is a progressive tax system. So what a progressive tax means is as you make more money, the tax rate increases. Now, what that does not mean is as you make more money, the tax rate on all of your income increases. Just for those incremental dollars over the last step of the progressive income tax. So if we think of this like stair steps, there's a percentage for each stair step of your income. What it's not is when you get to the top of the stairs, they're going to back charge all of the other stairs that higher percent. That's not how it works. That was how I understood it. That is not how it works. A lot of people think that. So there is no situation where you make another dollar, it bumps you into the next tax bracket, and you actually take home less money because they tax your entire income at a new higher rate. That is not the case. That's not how it works. They're just going to tax that incremental dollar at the next step at that new higher rate. So I think if we go through the tax bracket, maybe this will help, maybe it won't. If me reading all these numbers is confusing, just kind of skip through it. It's fine. I'm getting this from the IRS website. I think irs.gov is a great place to get tax information because it is from the source that you're going to pay the taxes to. It doesn't have a lot of the opinions or interpretations of different vloggers and advisors and banks who maybe have their own agenda. So that's where I like to get my information. But I will say it is helpful to get other people's interpretations of it because they can be a lot less dry and less technical than the IRS website. Sometimes I take a snooze fest when I'm reading this, but um, so another thing that I think is important is there's a difference between single and married filing jointly. So if you're a single person, what that means is you're not married, you don't have any kids, you have no dependents, you're not a dependent, you're not still on your parents' taxes, you're just alone filing your taxes. And those are the numbers I'm going to read. The next most common, maybe more common than single, is the married filing jointly. That's where you are married and both of you are filing your taxes together. And those rates are quite literally you multiply the single number by 2, and that gets you to the married number for each of these steps, as I'm going to call them. So, step 1, up to $11,600, your tax rate is 10%. So, if you imagine you're on the bottom floor, up to that 11,600, you're going to pay 10% or $1,160 in tax. Then above that, income over $11,600 up to the next step is 12%. So once you've paid your initial $11,160 at your 10% and you make $11,161, that $1 is going to be taxed at a 12% rate. But the first $11,600 is going to be taxed at the 10% rate. So then the next bracket is income over $47,150 is going to be a 22% tax. So you pay your first step is 10, and then all the income above that step up to the 47,150 is 12%, and then the income above that 47,150 is going to be 22%, up to the next step, which is $100,525, and all the income above that is going to be at 24%. Then you get to $191,950. Above that is 32%, and then you're going to get to $243,725. Above that is 35% for each incremental dollar. And then the top rate is 37%, and that is over $609,350. So basically it's a progressive method, but it's important to remember that if you make 243,725, which is the top for the 35%, and then you make one additional dollar, that 37% rate is not going to be applied to all your income. It's going to be applied to each incremental dollar above that $243,725. So I know that's a lot of numbers, but if we simplify it into steps, I think it makes a lot more sense. So you're going up the ladder of your income. So each dollar you make up to the first one and it's 10%. And then you go to the second one, everything above that 10%, all the dollars above that limit is 12%, and so on and so on. Now, one thing I did notice here, I misspoke earlier when I said that the married is multiplied by 2. That's true for the first several, but as you get towards the top of the income brackets, they actually get closer together. So, for example, the 37% is anything over $609,350, but for the married filing jointly, it's only $731,200. So I say only, but that's to say that it's not double at that point. So I just wanted to make that clarification real quick as I was reading through this. So another thing that's important in taxes that you hear a lot about, and I think there's a lot of misconceptions, is, oh, that's a deduction. I'm sure you've seen, I'm thinking of Schitt's Creek. There's a pretty funny episode where he's like, it's a write-off. Write-off, deduction, same thing. And if you've seen that episode, it's hilarious. I love it. But it's important to remember that the standard deduction is what most people are going to take. So what that means is the government says, hey, taxes can be complicated. So what we're going to do is we're going to give you a standard deduction. And so in 2024, the standard deduction for single person is $14,600, married filing jointly, $29,200. What that means is the government basically says, hey, we're going to give you that money as a deduction for free. So you can take your total income and reduce it by that much money for tax purposes, right? So where that comes into play is that means you're not going to pay taxes on either $14,600 if you're single or $29,200 if you're married filing jointly. So that is money that is basically tax free. The government just says, hey, you know what? We're going to give you this deduction and that's it. So a lot of people are under the impression, and I think a lot of charities market this, that, oh, a donation to us is a tax deduction. Or maybe you'll hear your realtor say, well, the interest you pay on your house is a tax deduction. It's going to save you taxes. I'd like to dispel that a little bit, because unless you make and spend a lot of money for charities and your mortgage interest or unreimbursed medical expenses or state and local taxes, which are the main categories of itemized deductions. There's a lot more. I'm not going to go into them all. But unless you spend more than $14,600 or married filing jointly $29,200, those itemized deductions are not going to matter for your taxes because you're taking the standard deduction. So in any tax filing program or any accountant, what they're going to do is they're going to probably ask you for all of those deductions, and then they're going to see if those add up to more or less than the standard deduction. And for most people, the standard deduction is going to be greater. It's going to be a bigger tax benefit. And so you're going to take that anyways. So all of those other things you did, I am not saying don't donate to charity. I am not saying that at all. I'm just saying that if you know you're going to take the standard deduction, don't count on that being a tax write-off. Now, if you do have a tax write-off, what does that mean? That means that each dollar that you're deducting, you're not saving 100% of it. So I think a lot of people think that, oh, I am going to donate to this charity and write all of that off my taxes. That's money I don't have to pay to the government. What actually happens is, say I'm itemizing and I'm going to make a $100,000 donation to a charity, which is going to be greater than the standard deduction. So I make that donation, and then I am going to save my tax rate on that. Why? Because it reduced my income by that amount. And so whatever the tax rate I have, which is between, 37 and 10%, is what I save. So I save either 10 or 37, somewhere in between, of that $100,000. I didn't take $100,000, not give it to the government, give it to this charity. I save my tax rate on that. So that's another misconception. I just want everyone to be careful, understanding that that a tax deduction is not a dollar spent here, a dollar saved on taxes. It's a dollar spent here, between 10 and 37% saved on taxes, depending on what it is. And if you're not over the standard, if you're going to be under the standard deduction in your itemized deductions, it's actually $0 saved on your taxes because you were already going to get that discount anyways using the standard deduction. So I hope all that makes sense. At the end of the day, my biggest faux pas, I guess, with what I hear a lot of people say is they will have like an investment idea, or they will want to invest in the stock market, and what holds them up is taxes. They're like, well, but if I do that, I'm going to have to pay capital gains tax, or I'm going to have to pay more income tax. And I get it. You don't want to have to go through the hassle of paying taxes. But at the end of the day, say you have an opportunity to make another $10,000, and you're going to have to pay whatever your tax rate is, call it 20%. You're going to have to pay 20% taxes on that. So that's still 80% of $10,000 or $8,000 that you made that you didn't have before. So sure, you have to pay taxes on it, but you can't control that you're going to have to pay taxes on it. What you can control is whether or not you go out and try to make that extra $10,000. So my personal advice is, do not get hung up on taxes. Consider them. Don't spend that whole $10,000 and then be surprised when your $2,000 tax bill comes at the end of the year. Remember them, but don't let it hang you up from achieving your financial goals, from seeking additional income, because that's ultimately where financial freedom comes from, is finding ways to create additional income, finding ways to really just use the system for our benefit. So that's what I have for you today. That's why I think paying more taxes is actually a good thing, because at the end of the day, I pay more taxes, I made more money. Does that mean I'm not going to try to maximize my deductions and really do all the tax advantages that I possibly can? No. But when I'm talking about making more money, I'm not going to let taxes hold me back from doing that. And I hope that you don't either. So that's our episode for today. I hope you guys have fun. I hope that you liked it. If you didn't, or if you did, leave a comment below. Let me know how it goes. Thanks. See ya.